Good morning, everybody. Welcome to the Game Plan here at Verified Investing Studios. My name is Gareth Soloway, Chief Market Strategist. So lots to discuss today. It's a shortened holiday week with Friday, the stock market being closed, but we know crypto never closes. And Friday, don't forget, the PCE data is coming out in the morning at 8:30 a.m. Normally, I wouldn't do a game plan Friday morning, but we're going to do an abbreviated game plan for the PCE data right here at 9 a.m. All right, let's get to it right now. See what we got on the charts. Let's first go through our key pinpoint levels and factors for the day. So what do we have here? Federal Reserve President Christopher Waller will speak later today. The reason why these Fed speaks points are important is because basically we're at a point now where we see higher inflation, the economy's still doing well, yet the Fed last week said, yeah, we're still planning on cutting 3 times. More and more analysts are saying, well, maybe not. Maybe that's not the key. Maybe we're only going to get 2 or 1 or even 0 rate cuts this year. So this is going to be really interesting to watch to see what he guides the market to. Remember, when these Fed presidents do speeches, it's often to guide the markets to where the Fed wants them to be. Okay, next up, Robinhood. Robinhood debuts a credit card, triggering the stock to jump about 7% this morning. Now, you guys know how I feel about this. This is just more debt, more debt, more debt. As long as the economy is good, credit card companies do great. The problem is when credit cards default because the economy does bad, that it then kind of formulates negatively on the underlying company. So it'll be interesting to see how Robinhood handles that if we get into a future recession. Number 3, Merck. Merck jumps 5% after the FDA approved its treatment for a rare lung cancer drug. The only interesting thing here on Merck is that if you compare it to Eli Lilly is like double the market cap, but Merck actually makes more revenue by far than Eli Lilly. So again, what's the difference? Well, Eli Lilly has the weight loss drug, right? So that's the difference there. But I do think that it offers an interesting idea for these other drug companies that do much better in terms of revenue and profit to maybe be a catch-up trade in the future. Next up, GameStop. GameStop drops 20% after disappointing earnings. They also announced job cuts. So this is a classic example. And in fact, I was looking at the chart on Monday, I believe, and GameStop had a big rally. And to me, knowing that the earnings were coming out, I said to myself, there's a lot of meme traders here that are jumping in, hoping that these earnings are good. The problem is that as much as we might want a stock to do better, you have to look at competition, you have to look at what's going on with their business plan, and this certainly didn't come out very well for GameStop. So just remember that eventually you can push stocks up, you can push meme coins up, you can do all of that, but at some point in the future, fundamentals actually matter. The use case for coins, right? Or the profitability for a company like GameStop. Lastly, late day sells, and this to me is the most important that we're going to discuss today. Late day sells in big name stocks the last few days are likely a result of rebalancing at the end of quarters, right? So at the end of quarters, if you have a stock that has gone up parabolic, a lot of funds, a lot of ETFs that state that we're only going to hold X amount of this, they're looking at their portfolio, they're looking at the ETF, they're looking at their fund and saying, wow, this is now a huge percentage of our fund because it has gone up so much. So what do? They back it off. They unload some of that to bring it back within the criteria of ownership percentage in that fund. And so again, we'll go over some charts in just a minute that show this, but I think that's why you saw NVIDIA dump out late yesterday, SMCI, Meta. Those are all stocks that this quarter have had parabolic moves, so they've become overweighted in portfolios and they have to be brought back down. That may continue today, so you may see continued selling, especially late in the day on names like Meta or on NVIDIA. Okay. Let's get right into a couple other things. First and foremost, range trading mastery was the winner yesterday. So now we're going to find out which person or which one of you guys gets the range trading mastery. I'm going to run it right now. Let's get this party started. And again, this course is by Paul Sampson, and he's going to have a crypto service on Verified Investing starting next week. So be ready to rock and roll. All right, who's the winner today? And then we'll do the spin later. The winner is at RJ Barrymore. Again, that's at RJ Barrymore. Don't forget to email Lawton@verifiedinvesting.com. That's Lawton@verifiedinvesting.com. He will confirm that you are you, and then we'll get you hooked up with that course as soon as possible. All right, now into the charts we go. Let's keep running through our key factors, and don't forget, we'll do a spin in just a little while. First and foremost, I want to look at the S&P 500. So pre-market, the S&P is rallying again. Now, we saw this yesterday, right? We saw early in the day the markets were up. Today, we're up pretty nicely, too. And we could see that late-day sell-off that plagued the markets. But if we look at this price action, this was yesterday, or this was pre-market. Then as we came into the open, we came down. We went very quiet. And then there's your late-day sell-off yesterday. Look at where we're trading. It's as if that sell-off didn't even occur. If we look at the highs from yesterday, we're virtually right into those levels. So the markets are trying to hold on here. There could be some end of quarter window dressing. Window dressing, for those of you that don't know, is where funds will generally put the best stocks that they can in their portfolio to make their portfolio look best for end of quarter. And again, that could be going on here, which is trying to bring the markets back up. But let's watch later today to see if the rebalancing on some of these big names causes selling again. Next up, we have to look at the biggest thing of the day here, guys, which is the fact that the S&P confirmed. So finally, we got confirmation, guys, as of yesterday's close. Now, again, I'll zoom in, but I wanted to show you the wedge pattern. This is a classic wedge pattern. Wedge patterns that break in this scenario, they usually don't have just small corrective moves. Now, it doesn't mean that you're going to have a big rollover in the next week. That's not what a breakdown tells you. It tells you that essentially you go from buying the dips to selling the rips, meaning that instead smart money now sells into the pops, which will inevitably come because you still have dip buyers. But again, that's the tendency. Eventually, you get to make lower highs and lower lows once you break down. Now, if we zoom into this chart real quick, I want to show you, again, confirmation at its finest. So what do we have here? Well, don't forget, we were below this wedge pattern here. But again, it never confirmed, and when it doesn't confirm, it can recapture the wedge very, very easily. Then we closed below here, and we confirmed with that secondary close lower. Now again, what is this going to mean? Well, today, based on today, we're basically right back here, but as long as we don't confirm back inside of this level, then this is a broken pattern, meaning it is a bearish pattern breakdown. So again, just keep that in mind. You have to, again, now, by the way, it doesn't guarantee anything. Remember, it's all probabilities, but once you confirm outside of a wedge like this, basically it's 80% odds, leaving 20% chance that it could still, surprise me. But for the most part, I go with the probabilities, which is that, again, even if we go up like this, eventually you do that, then you get another bounce, then you do that, and so on and so forth, all right? Now, we've seen this on the NASDAQ as well. Now, before we get into anything else, I want to show you a couple things. So this is SMCI. And again, if we look at SMCI and we think about rebalancing, look at the price action on SMCI. It was positive all day long. And in the last 20, 40, 60 minutes, the last hour, we saw this meteoric decline on SMCI. Now, again, the reason why rebalancing is impacting SMCI and NVIDIA, and we'll look at NVIDIA in just a second, is if we look at the chart here, right, and we go back to the start of 2024, look at where this thing was, right? So this is at the beginning of the year, price was down at $280 a share. It is now at $1,000. So think about if you have a portfolio where you're like, okay, only 0.1% or 1% or 3% of my portfolio. Let's just take 3%. So if you had 3% allocated that could be an SMCI at the start of the year, that in your portfolio, if all other things stayed constant, is now literally at about 12% of portfolio. So people, again, funds are saying to themselves, well, we don't really want this to be at 12%. That's a massive amount for a fund to hold. So what they're going to do is they're going to sell off a portion of that to bring that allocation back either to 3%, maybe they're okay with 5%. But again, that's why you get the rebalancing sell-off on stocks that have made these massive runs. Another good example of this is also seen in NVIDIA, right? NVIDIA, there's your late day rollover. That's rebalancing selling going on right there. If we flip back to the daily chart, where was NVIDIA at the start of the year? Well, we look at it right here, right? Here was NVIDIA right back here. So at the start of the year, this was $475 a share. So you're now talking, it basically doubled. It basically doubled in value. So anyone that was holding, let's say, 5% of the fund in this stock is now valued at 10%. So there's a certain amount that they're going to take off the table and sell to kind of reconstitute their portfolio into normalized levels. And lastly, again, take a look at Meta. Same thing on Meta. Meta, big drop into end of day. Now, you might say, well, Meta's not one of these flashy semiconductor stocks. But if we look at the daily chart on Meta, look at what this shows us. Meta, remember, had earnings here, and it had this huge move up. So again, it did gain a huge amount in the first quarter. In fact, if you go back to the start of the first quarter, Meta was trading at $345. So percentage-wise, that is a big move. Now, I want to show you a comparison. So let's take a look at, I don't know, let's go to Amazon. Let's see Amazon. So if we look at Amazon, look at the difference in charts. So yes, you saw a little bit of selling into Amazon because the market was coming down, but it wasn't a massive move down, because if we look at Amazon on the daily chart, yeah, it's up for the quarter, but it's not up as much. So where was Amazon at the start of the year? It was trading at $151, $152. Yes, it went up, but it didn't have the explosive 100% type moves or 50% type moves that a lot of these other stocks did. Same thing could be also said for Google, right? If we look at Google, Google at the start of the year was trading around, let's see here, right around $135. So yes, it's up. But again, if we look at the intraday, look at how small that sell-off was at the end of the day, because there wasn't the need to rebalance. And again, this is a really important point for quarter ends. You can use this to your advantage. Now let's break it down again. How do you use it to make money? Well, at the end of quarters, in that final week, you look for stocks, large caps, mid caps, that have made the biggest move up throughout the course of the quarter, and you look for that late day sell-off on the preceding days before quarter end. And you can see it again, SMCI, NVIDIA, Meta, but not so much on Amazon, Google, and some of the other ones that didn't make such big moves. Really interesting there, guys. All right. So lastly, I want to talk about MicroStrategies here, guys. So I have my RSI up here, and I want to show this to you guys. So you have a negative divergence developing on the RSI. It's a triple threat. What I call triple threat is when you have three pivot points that are lower, 1, 2, and 3, all lower, while price has made higher highs, right? High and higher high again. Now, the kicker here is that this is a pattern that generally precedes a rollover. Now, listen, could MicroStrategies go up to $2,000 a share? Sure, it could. That doesn't really change anything as long as the divergence stays intact. But essentially what this is telling you, RSI is telling you that big money, smart money is unloading into this and setting up for something bigger. Now, you might say, well, how the heck, does this make sense, or what's going on here? Well, if we look at past moves, we can see very clearly that you had negative divergences, right? What do I mean by that? Well, we have Bitcoin's chart up here. So on Bitcoin, let's go all the way back to 2021, right? I'm going to go all the way back here, and I want to just look at the RSI in 2021, okay? So where are we? Here we go, in 2021. So in looking at the RSI, and I'm going to try to drag it in a little bit closer so we can really see, look at what the RSI was telling us going into the first high pivot before the drop. So in 2021, we had two pivot highs, right? We had the 65,000 high and the 69,000 high. Now, before, when you were going up here, you had a collapse down to 30,000. And did the RSI help predict that? And the answer is, look, high, higher high, higher high, higher high. Look at that. Look at all these lower highs, and then what happens? Drop. Boom, down. Again, so the negative, this is called a negative divergence on the RSI, where you get lower highs on the RSI, but higher highs on price. Another thing that's really cool to look at is if we flip over to the Bitcoin weekly chart, right, and we flip over here, did you have a negative divergence after the two tops in 2021? And I'm going to zoom in as much as I can because I really want to make the point here. But look at this, guys. So here's your high in early 2021 at 65K, right? So there's your high at 65K. Here's your high at 69K, okay? So it was a higher high, very clear higher high. Now look at the RSI. high, and look at that. So this again told me, and this is one of the reasons why I was able to call the high at 69K and say it was going to go back to 20K, is because this is just one of the many factors that I had. But look at the higher high and this is about as crystal clear of a negative divergence as you're ever going to get. And then what happens to price? It goes from 69 back to 15 before finally bottoming out. By the way, you want to see something even cooler? Look at this. Let's zoom in a little bit more. Let's look at the lows at 15K. Did we have a positive divergence? Because divergences work in both ways. All right, so if we look at this, right, let's bring up this. All right, so here's the low. This is the 15K low. This is when, Sam Bankman-Fried, FTX, all that stuff was going on. And if we look at this, right, we have a low here, right, and a lower low here. But if we look at the RSI, look at this. It was upsloping. All right, so again, you had a positive divergence in RSI with a negative price drop. And again, that's telling you that at least in the short term, price was going to likely turn up. And sure enough, price did turn up. So again, a little bit of an educational piece today on RSI. Now, again, I want to just preempt this and say RSI analysis is not an end-all be-all. It's not like I just say, oh, that's a positive or negative divergence, so I go long or short. But it is a tool that, again, is very, very useful when analyzing and using other factors. The key to a good investor or trader is finding multiple factors that all tell you the same thing. The more factors, the higher probability of success. All right. On that note, guys, we're going to come over here to the wheel and make our spin for the day. And I'll tell you at the end of the show what question you guys just need to answer at the bottom of this video. And remember, you got to follow Verified Investing on YouTube or on Twitter to be entered. Basically, that's the criteria. If you're not following and you win, sorry, no can do, you won't get it. Let's spin away. Let's see what it is. Oh, the 1-minute scalpel, Dr. B's new course. That is, by the way, this guy, he's come in here and he's blown me away with his knowledge on scalping the 1-minute chart. He is so accurate. For those of you in the live trading room with us, it is unbelievable. But again, this is an incredible new course that we'll be starting to sell it next week, I believe. And again, this is a game changer. When you learn what this course shows you, it'll blow your mind. So congratulations. We'll do the draw tomorrow. And just don't forget, guys, if you're a sponsor out there that wants to sponsor this or Verified Investing, reach out to Lawton at Verified Investing as well. All right. Now, just quickly, guys, we're going to take a quick 30-second break to thank LuxAlgo. Again, I'm developing more and more things with LuxAlgo, and I do thank them for sponsoring us.
Have you considered enhancing your trading experience? We have an amazing tool for you. LuxAlgo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. LuxAlgo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with LuxAlgo. Please visit the description below and sign up for LuxAlgo today.
All right, guys, we are back, and thank LuxAlgo again. Appreciate them as sponsors here. Now, number one, this is a chart here of Bitcoin. Now, this is the daily chart, and we are seeing a little bit of a price uptick. So one of the things you're going to watch on this chart of Bitcoin today is the high from yesterday. That high, which is around, I believe it's around 71,600. So keep an eye on that. If we can break that, then there is a decent probability that we can make a run into the $73,000 to $74,000 range. That would be a double top. Now, like I said yesterday, the only thing you want to be aware of is on the bearish side, if it breaks this line, right? Very crystal clear. There's no missing this line. If at any point Bitcoin breaks below this, that would be your alert. That would be your warning sign that you could be due for a bigger corrective move. But at this point, basically, what are we creating, guys? It's creating a wedge pattern, right? So classic wedge pattern like this. And again, the idea is, do we hit here? Do we get rejected? What do we do? Eventually, one of the ways, we either break out or break down on these wedge patterns, and that will be interesting to watch. So again, a little bit of an uptick today on Bitcoin. We'll see if it lasts. A lot, I think, is determined by what the stock market does. I want to just quickly touch on Cardano. I gave you the level to buy on this point on Cardano earlier, basically a week ago when we were coming down to that, and it went right there. Same thing. Notice this trend line, very similar to the Bitcoin trend line. A lot of the cryptos have it. And what this tells us is that the cryptocurrencies generally trade together, right? If Bitcoin's up, generally the altcoins are going to be up, and vice versa. If Bitcoin falls sharply, generally the altcoins fall slightly. So a lot of them have these trend lines, these upsloping lines where technically Cardano is safe unless it gets below here. Gets below this area here, then you have problems. Now on the upside, you have your double top here, which is around 80 cents. If you can break above that, the one thing I'm keeping an eye on here is it looks to me like there could be a parallel channel here. And let me just bring up that parallel channel. We'll draw it in real time here. Let's take that same low. Notice it's in orange, and what we can do is we can spread it right up here. So essentially, if we can break above, let's say if we do come up here and we hold this lower level, your upside target is going to be that upper range of the channel. If I pull it down a little bit, you're basically looking at a potential for a 90 cent-ish, give or take, level target on Cardano. So again, that would be your next target to the upside. Now, by the way, that doesn't mean that it can't go above that. That's just going to be some resistance. It's going to have to fight through that level on the chart. Next up quickly, guys, gold here. Gold is upticking again. I continue to see the bigger pattern here on gold, which again is just that inverse head and shoulder pattern. Amazing breakout. And again, I don't want to feel like a broken record here, but again, for the most part, it's just crystal clear here to me. Here's your shoulder, here's your head, and here's your shoulder, and there's your breakout. You do a measured move from this low to here, take that distance, replicate it out there, and you basically get a $2,530 price target on gold for the next 12 months. So that's really how I do it, guys. I just look at these chart factors. I try to align as many things as possible and go with that at that point. Silver continues to struggle, guys. Now, listen, I still think eventually silver breaks out, but again, gold is the pure play, right? It's the pure inflation play. It's the pure fear play. And again, silver, you can see, here's your inverse head and shoulders on silver. And again, it got rejected again. Eventually, once it breaks, that's the green light to say, okay, game on. Now you have a bigger breakout upon us. But again, the question is, how far do we pull back before? Do we come down here? Do we go up here? What do we do ultimately on the charts until we get that breakout? Looking at palladium, let's look at platinum and palladium real quick, guys. We'll touch on these. Platinum, again, this is palladium, excuse me. It's coming back down. I want to flip over to the weekly chart and just take a look. So the weekly's been in a steep decline, but I will continue to say, I still think you're basically at or near major technical support. If you look at all these levels here, right, all these high pivots and even this low pivot, it essentially is in a straight line, right? And we've kissed that level. So again, for me, anything between $800 and $875 is probably a good opportunity to accumulate palladium in that range. It has had a bounce, but it's also pulling back. Platinum, real quick, guys, same general thing here. If we zoom out on platinum, platinum hasn't really gotten killed quite as much. But again, same sort of deal here. If we look at this, we have a short-term wedge pattern downsloping with a flat bottom. Can it break above that, or does it break down? And then on the bigger picture, you have lots of support right down here, right in this lower range, these pivot points all the way across. Okay, next up, quickly, we'll take a look at oil. And oil, again, guys, I gave that big warning at the start of this week because I found that new trend line. Pretty wild trend line, I have to say. Let me just zoom out. Again, it goes all the way back to the COVID lows, and we have essentially, if we zoom in, we've come to the underbelly. Now, I still think we could maybe push up one more time and test that 84 to 85 level, but I am concerned now that we're going to start to see a bigger move down in oil based on this chart. The only thing that would negate it, again, very simply, right? Charts tell me everything. I don't tell the charts tell me. If we get above this range right here, right? If you can really confirm, let's say north of 85, well, now you kind of get above that range, maybe price can continue to go up. But as long as it stalls out around this 85 with no confirmation, you got to be on the bearish side for price action. So again, just be aware, I was bullish up to about 83 to 85. Now I'm more just kind of iffy on it. I'm like, all right, well, the bigger pattern is now negative. Even if we still get a push up to 85, the bigger move is probably destined to be on the downside of oil. Next up, guys, natural gas. This could be a little breakdown in nat gas. There's your wedge pattern. It looks like as of now we're breaking lower through that. What does that mean? Well, it means we could end up going back and testing these lows here, which is down around the 165 range. It's not that far. It's only another 10 cents on nat gas. But for me, that would be where I would pick up a little bit more nat gas. Right now, I have such a tiny amount. But again, at that double bottom, I would be more interested in picking some up. All right, back to center screen here. So as always, guys, lots of fun stuff to do, lots of interesting technical analysis to divulge to you guys. I really do appreciate each and every one of you guys coming out and listening and supporting me and commenting. Speaking of commenting, today, folks, let's talk about one thing in this video that helped you. Maybe was it when I went over, the RSI or whatever it may be. But I'd like to know, one thing from today's stream that you took and you said, wow, that's really interesting. Maybe it was the rebalancing analysis. But again, that's going to be the question for today. So make sure to post that below this video on Verified Investing, either Twitter or YouTube. And again, guys, one more time, thank you so much. You guys rock. The support I get from this show is amazing. I love hearing how it's helping you guys learn. Have a great rest of your day. Let's do this right, guys. I'm going to try this. Let's see. That's horrible.